Hi, everyone. It's Damien Martin, the host of the Simply Tax podcast, and I'm here today to give you a simple insight into whether a rental activity rises to the level of a Section 162 trader business. And this is really a very complicated area of the tax law, and it's just not possible to do a video like this in only a few minutes and explain it to you. But my goal today is to explain to you why it's so significant, why it's so complicated and challenging, perhaps, to give you a few tips on applying it, also to give you my 5 takeaways from studying the case law in this area on the issue. Now, your first question might be, well, why do we care about case law, right? You just told me the section is 162 of the Internal Revenue Code. Let's just go out there, look at the definition of trader business, and we'll apply it to rental activities, right? It doesn't work that way, as you probably already know. There is no definition of trader business under 162. It's not defined in the code. It's not defined in the Treasury regulations. So we are going out to this body of case law, over 100 years of case law, and oftentimes not even dealing with 162, particularly in the rental arena, because I would say that maybe historically it hasn't been of such significance, or maybe hasn't mattered as much whether or not you get that treatment. And of course, if you're not a 162 trader business, you're a Section 212 investment activity, generally speaking. And if you're not really familiar with the difference between those two code sections, we actually just had a guest on the podcast, episode 64, John Hackney. He did a great job of explaining the difference. So go out to about the 5-minute mark and give that a listen for a refresher on the difference between 162 and 212. Right, but I mentioned, so there's 2 reasons it hasn't really been, I'd say, as significant, or maybe hasn't as much mattered whether or not you're a trader business and that rental activity rises to that level. Number 1 is it gets reported in the same spot, 8825, regardless of whether it's a Section 212 investment activity or a 162 trader business. So you can't per se necessarily tell from the reporting whether or not it's a trader business. That's great, right? The other reason I'd say is that it hasn't much mattered in terms of whether or not you get the deductions, because Section 62A4 tells us that we get an above-the-line deduction for expenses that are related to the production of rents. So that means that it's not treated as a miscellaneous itemized deduction as Section 212 expenses generally are. That's even more significant out of the Tax Cuts and Jobs Act because we've got this temporary suspension of these deductions, of miscellaneous itemized deductions, at least until 2025. And so I guess when you couple that with 3 other areas, it's actually become more significant with the Tax Cuts and Jobs Act. So, of course, the miscellaneous itemized deduction. But for rental activities, the 3 are Section 199 Cap A. You want that 20% of qualified business income deduction for your rental activity. You got to be a trader business, right? The second area is Section 163J, and we've got this new business interest expense limitation rules. Well, it applies to business interest, right? So if you're not a trader business, then the rule doesn't apply. So again, that determination is very significant. The third area that's been coming up quite a bit more, especially with the latest round of guidance on qualified opportunity zones, is whether or not you rise to the level of a trader business for the rental activity. So again, kind of 3 areas that get more significance. And I mentioned it hasn't much mattered. I don't want to just gloss over the fact that it has mattered in a lot of other areas. And actually, the case law that we have has really dealt with some of those other areas. For example, Section 1231, and whether it's an asset that's held in a trader business and whether it gets it gets long-term capital gain treatment if it's held for more than a year. Similarly, Section 1221A2, and whether or not it gets basically assets held in a trader business don't receive capital treatment. So that's another one. 469, passive activity loss rules, that's a big one. Net operating loss rules, you got to be a trader business to basically generate a net operating loss. So it's definitely not to say that it hasn't been significant. I just think it hasn't risen to the level of case law, perhaps. And so I think it's pretty interesting from that perspective. And I think there's this perspective now and kind of that, this is something new. It's really not something new. It's something that's been, like I said, 100 years of case law that we're kind of struggling with this trader business definition. So definitely an area that we've been continuing to deal with. And there's a lot of discussion, particularly in 199A area, that maybe we could get some additional guidance when it comes to rentals and applying it. We ultimately got a safe harbor, but many are kind of struggling with that a little bit and kind of what that means. So I think that brings us to maybe some areas of misconception. One, and this is a big tip, that you've really got to only look to the activity that you're dealing with. So that one rental activity. So if I own 5 and they're separate activities, I can only look to each separately. I can't push them together to figure out whether or not I have a trader business if they are separate activities, which is probably a separate discussion for one of these of itself, whether you have separate activities. I think the other area of misconception is that I don't personally, as the owner of the property, have to do the work. My agents can do it on my behalf. We're looking at the activity, not me. So that's a difference between Section 469, the passive activity loss rules, so that material participation concept. It's very different than what we're talking about for Section 162. Again, we're looking at the activity, and so that can be done by somebody other than me. So let's talk about the 5 takeaways from the case law. I had 10, I'll admit, because there's a lot in there. It's very, very overwhelming. I even built this template for our firm that kind of pulls them together, and that thing's overwhelming. So I wrote them down to make sure I kind of keep them simple here, right? So 5. Number 1, the mere ownership of property does not rise to the level of a 162 trader business, generally speaking. There's got to be that regular, continuous, for-profit activity going on. And that's really, I think it goes back to there's a difference in, there's sort of a dual nature, I guess we'll say, of real estate. So in one respect, you can be operating as a trader business, that regular, continuous, like we talked about. In another aspect, you can be holding it for long-term appreciation, and it's an investment, right? So you kind of have this dual nature. So just the mere ownership of it doesn't get you there. It's got to be a little bit more than that. All right, let's look at number 2 here. So the fact that somebody operates it, and this kind of goes back to my clarification point earlier, right? That somebody else operates, my agent, my independent contractor, I can have a full-time job. I'm a full-time CPA, right? I can do that, and as long as somebody is doing that activity on a regular and continuous basis, I can get to the level 162 trader business. Again, that kind of flies contrary to the, what we know about 469 and the passive activity loss rules there, right? Let's see. So number 3, it's generally an unfavorable thing if you've inherited a property. Again, not to say that it's necessarily determinative, but oftentimes in case law, if it was inherited, it maybe points more towards that long-term appreciation than the daily operation on a regular and continuous basis. All right. Number 4, the operation of a single rental property can be a Section 162 trader business, particularly in the 7th Circuit. But that important distinction here, and I mentioned this, the 7th Circuit, is you got to pay attention to what circuit you're in, because actually the 2nd Circuit has a case law that goes kind of the opposite way and is really kind of contrary to that. So again, have to look at the facts and circumstances. It's very factually specific, but again, just because you have the one property, single family property perhaps, doesn't necessarily mean that you can't get to the level of a 162 trader business. All right, and number 5, triple net leases. Those generally don't rise to the level of a 162 trader business, but there is actually case law. It's under, there are ERISA cases actually that look at the definition of trader business and deal with triple net leases and basically show you how they can be a trader business, a 162 trader business for the, if we're going to be getting back to our code sections here. And the big distinction is that you as the owner, so again, back to the example with me, are responsible for getting the work done. It doesn't have to be me again. It could be my agent, my independent contractor. That's consistent with that rental safe harbor that we got under Section 199 Cap A that I mentioned, as long as it's getting done. But that's a little bit unique from a traditional triple net lease, right? Basically, that you're on the hook for, you're legally responsible for the maintenance under the property. So if the lease provides otherwise and the tenant is truly legally responsible for that, that's where that triple net lease generally doesn't get you to that level of a 162 trader business. So that's it for today. Covered a lot of ground, and again, just barely scratched the surface. So leave me a comment below with your questions so I can help. I think it's probably the most common question I've been getting lately is regarding trader business and rental. I actually built a tool for our firm to kind of go through all this and do this analysis and help to document it. So it's very complicated, and let's get the conversation going. But that's it for today. I'm Damien Martin, and thank you for watching.